SQQQ. Yeah, and this looks good. I haven't looked at the market at all. I should look at the uh, Nasdaq as well. Where is that here? Yeah, so not putting in an all-time high. And so really like 430.24 is the number to hit. The high today was 430.22. So not able to get that, and then getting this bearish engulfing candle. So that doesn't look good as far as the NASDAQ goes. Probably look over at the SPY in a second, or the SPX. But yeah, this, I mean, it's a bullish engulfing candle. This inverted hammer at this downtrend following this big red day, 5% down on the day on the second. That is a reversal signal. And then seeing this bullish engulfing candle following this, yesterday it was green. Yes, closing at 11.78, up 4 cents overall over the day. But yeah, this looks like, the bottom could be in. I'm not sure exactly. I don't I don't pay attention to my buys with the SQQQ and stuff like that. But I'm pretty sure I bought a share yesterday, added to my position. I've been doing that for the past couple months, and yeah, and also though too, like you bring up the SQQQ. One thing that I didn't get back all of my shares, but one thing that I was excited about, I had trimmed on a pullback. I think on this, yeah, it ran up here and I trimmed on the pullback, and then it went up a little bit after, closed up here. I was like, man, I should have just not let those go. And it's like, no, I mean, I do think that it's going to be coming back to one of these levels. And look at this. This is pretty cool. Yesterday, what was the low? $4.80. What's this Fibonacci level? Rounding, $4.80, the 618. That is like, I'm pretty sure, I haven't looked into it, but I've heard that the 618 is statistically the level price either returns to on the upside or the downside. And so we're seeing now a bounce there with this bullish engulfing candle, 5% on the day with this. And so I don't necessarily think this is the the low. We might be going back to 437 here with the SQQQ. This is, yeah, the low. Maybe this is the top of the market. I haven't actually watched Gareth Soloway's game plan for the day because I just woke up before the stream. I got to watch that after it. But I imagine he'll be going over, the market and stuff like that. He does those the half an hour before market opens. So I just find it's a really nice way to start the day. But I've been on the night shift, so I couldn't watch it. And yeah, so I do post links to his game plans. I do think it's a really useful learning experience. That's actually how most of the stuff that I put up on the charts here, I've learned by either watching people or from, like, and Gareth Soloway, he does a very good explanation of why he's drawing lines, why levels stand out to him. And so it's like I've just been trying to like emulate him and his discipline. And so I'm just learning as I go. But yeah, I mean, I just like with the market here, let's look up the SPY or the SPX. I want to call it the SPY. It just rolls off the tongue better, but this I think is a better representation of, this being a higher high, because when the SPY was actually like shifted a little bit from what I've seen. So it had made a higher high earlier in the SPY than with the SPX, but this is the better reflection of the S&P 500 from my understanding. And so yeah, this could be, bullish consolidation. It could be a bull flag. Not good at identifying those. But yeah, I mean, the compelling thing for me with the S&P 500 is 5,000. I would think that, and just think about it. You got to think about it psychologically, or that's what I enjoy doing. Is the S&P making headlines right now? Sure, yeah, and it's making some because it hit a new all-time high. But what's the headline those news outlets want? They want 5,000. that is, you know, that is the level. Everybody, oh my God, the S&P 500's at $5,000. I've got to buy some. It just keeps going higher. It was at an all-time high 2 weeks ago, and now it's at 5,000. Next is 6,000. And then you get people buying that, and that's when Wall Street can offload their shares, rug pull everybody else, rug pull retail, rug pull, I don't know, the working class man or woman, uh, just trying to think about their future and invest. And oh, it's at 5,000. It's just going to keep going higher. That's not how it works. People get rug pulled, and Wall Street takes their money. And so I think 5,000 is where this is going. And so that is why I continue to slowly dollar cost average into SQQQ SH, which is short the S&P 500, but not leveraged, and then the SOXS, because I view that because technology outweighs these run-ups. And so that's going to balance out. And with that, semiconductors are going to come down. And so so the SQQQ and SOXS, those are both 3x leveraged. But, the moves, this run up here with the SQQQ, almost 100% going back to the end of October, I believe. And then SOXS, that move is 200. Why? When they're both 3x leveraged, it's because semiconductors and technology more than outweigh this run up with the S&P 500. And so when those get balanced out, semiconductors, technology, they're going to fall the furthest. Everything else won't have to fall as much because technology outweighs it. And so I continue to dollar cost average with these every week, buy one more share. And I should not do that on the long one. I'm not buying the long. But like this, I'll remove these drawings. This every week, I just add one more. I might have actually added an additional one today. Maybe I did. I'm not sure. Actually, I don't think it hit the I think I had an order at 270 or 575. Let's see. What was the low yesterday? 480? I don't know. Yeah, I don't know. And also too, in case I'm wrong about this, maybe this doesn't hit 5,000. And so that's why I'm dollar cost averaging in, because like I was wrong with Bitcoin. I was waiting for it to hit, 15K or 12K, whatever, and it got to like 15,500, and I missed the bottom of that. So now I'm just dollar cost averaging, where it's at now, because I don't want to miss it if it keeps going higher, and I just make sure that those orders are small, so I don't get emotional about them. And if it does continue to go lower, I continue to buy the dip. If it turns around, then I just relax. But I think that this is going to make headlines, and then that's going to, I think that, and also too, it's an election year. It's an election year. So, we are, we're going to hit 5,000 because it's rigged, and because then you're going to be able to it's going to look good politically for the S&P 500 to be at an all-time high. The economy's doing good. And so really too, I think that not to get into politics or anything like that, but like with the current administration, if they're wanting votes, I feel like the left, I imagine, is less interested in something like the stock market, whereas the right is more interested in it. And if you see, the stock market's at an all-time high, I think that would bring in more people from the right. And then people from the left, are already voting what they're voting. And so as far as the current administration goes, and so I feel like this is going to 5,000 for that reason, for headlines, for Wall Street to offload their shares, to rug pull the everyday guy and girl. And and then I think that these gaps will be filled. And so I'm stacking shorts very slowly, casually, because this stuff always takes longer than you expect.